Hello everyone. Good morning from this part of the world. Uh, trust we all had a wonderful weekend, and depending on what time zone you are tuning in from, I wish you good morning, good afternoon, and good evening to you. Well, technical issues wanted to take over again as the previous stream link just went off all of a sudden, but thank goodness we were able to sort it out, and hopefully that this continues this way so that we have a seamless session. So I'm just hopeful that we do not come up with any itch as the session goes by. So how are we doing, guys? And trust you're all doing very well. And this morning we are going to be delving into the market as usual. It's the first trading day of the week, and it's important that we set a good foundation for the week, and that's one of the reasons why we are here. And for those who are joining me for the first time, you're highly welcome on board. Glad to have you around with us today. This is the Forex Morning Mastery. We run this 3 times in a week. That is Monday, Wednesday, and Friday. Same time around 8:30 a.m., 8 a.m. UTC. That's the time we run it, but this one is coming a little bit late due to technical issues. But trust me, that's how we do it actually. So you're welcome on the board, and if you have questions or you need some clarifications, feel free to always jump in the comment section and comment. Of course, I'm here and willing to be of help in that regard. So today we are going to be delving into our usual market, the USDJPY, the GBPUSD, the US crude oil, and our favorite, the gold commodity. And during the course of the weekend, I did share with you my plans for the week, what I'm looking at on the USDJPY, the GBPUSD, and the gold commodity, where I did give a top-down analysis of what is going on in the market from both technical and fundamental perspective. So this morning we are going to be doing a follow-up on this asset, and before we go into the follow-up, of course you know what we do. The first thing we want to be doing now is to understand what is driving the US dollar market. Very important. If we are considering trading the Japanese yen, the gold, the US crude oil, and the pound sterling, it's important that we understand what is driving the US dollar market dynamic. Now, what you see on the chart is the 4 hours time frame of the DXY, that is the US dollar index. And on this chart, what I did was to take into account the character of price action in the last 6 to 7 weeks, and I was able to identify an ascending channel, which will be this upon which decision is going to be made this week. So as you can see, after connecting the series of higher lows, we have the support line of the ascending channel right here. And after higher highs, we have the resistance line there. And this further emphasized that the price of the US dollar is bullish at the moment. The momentum is strongly to the upside. And of course, this should be coming as a surprise to most of us, especially when we consider the fact that the US government is shut down. And it is expected that this should normally weaken confidence in the US dollar, right? But instead, many investors rushed into it because other major currencies, especially the euro, the yen, and the pound sterling, of course, have their own setbacks as well when it comes to political, structural, and of course, economical perspective, making the US dollar a relative harbor for most investors. And besides that, the US Treasury bond yield has been doing relatively well, and this of course also supported the US dollar demand. Also, the absence of fresh weak US economic data from the major government agencies also has prevented downside surprises that might push the US dollar to the downside. And the reason why these departments are not on is basically because of the US government shutdown. And this week, I don't know if it's going to look at the economic calendar. We are expected to see some high impactful event this week, like the, hold on a second, like the PPI. We have the producer price index. We have the retail sales data. And what else again do we have? Okay, we have the initial jobless claim too as well. So this department, we don't know if they will be able to publish this data this week. So basically, those are one of the reasons why the dollar has been doing pretty well. And at this moment, looking at the structure we have on the 4 hours time frame, let me zoom in so we can see clearly. We saw here that price of the dollar tested a monthly high. Let me see, what was the last time price got here? I think about the last time price was here was in July, right? And August, September, that's 3 months ago that price got here. And as soon as price tested that level, we saw a retracement to the downside. And this could be as a result of some profit-taking activities ahead of the weekend. And remember, on Friday, Trump also announced the possibility of hiking tariffs for China, which sent in some ripple into the market, resulting in that move to the what else again? Okay, that's basically what happened last week on the US dollar. Now, the question as we head into the week is whether the US dollar will continue the downturn that started on Thursday. Will it continue back into the support line, maybe to incite another wave of bullish momentum, downside to incite a further sell-off? Or is it ready to bounce up again from where it closed last week to begin that next wave of bullish momentum? So that's the question on our mind. And whatever happens here definitely is going to be having a significant influence on the assets we are storing. So the pullback we saw on Thursday may only be a pause, not the end of the move actually. So if risk sentiment wobbles again, let's say trade war flares up, there is a trade war tension between the US and China right now, where Trump is said is planning to hike tariff for China following China's decision on rare earths policy on rare earth elements. And of course, we also have geopolitical shocks as well. So US dollar could rebound from this particular area. But I think the upside is not guaranteed. The momentum looks a little bit stretched, and the US dollar strength already has a lot baked in. So if market lean risk on and other currencies find fresh strength, we could see further weakening of the US dollar. And to help me navigate this market, I have my key level at the $98.70 area. And one thing you will notice, we don't want to go too far. Let's go to as far as July. You'll see how this $98.70 level has basically been a strong selling niche. At some point broke out of the structure during the last trading day of July, but it didn't last long up there. I think about 3 weeks thereabout, price dropped back below in August, and ever since August, price action had maintained bearish strength below that $98. Emphasize that this area is a strong selling niche. Now, something interesting happened last week where we finally saw price break out of the structure for the first time in 3 months, which for me is a very strong signal, and this could be a platform for buyers again. Now, if US Treasury bond yield remains strong or rise, the US dollar will stay in the game and maintain that support at the $98.70 area. So the 98.70 level is going to be like a yardstick to guide my trading decision this week. So as long as price remains above it, I want to see the dollar as strong. But if at any point in time price drops below the $98.70 and we begin to see selling pressure, you know what that means. We are back within seller's territory, an area which has a selling memory in the last 3 months, and that could incite a move to the downside. These are one of the things that we are going to be looking at on the US dollar index to guide what we do on the assets we are monitoring. So this week we are going to be watching a lot of things that could influence the US Treasury bond yield. We want to follow that chart, especially the 10-year Treasury bond yield. It will be telling us whether the dollar is still strong. And then we need to also track headline news, especially the US-China situation, geopolitical tensions as well, the Russian-Ukraine war, the Middle East situation, and of course, US dollar related news. Then at this point, I do not want to consider committing heavily at the beginning of this week. We need to wait for some confirmations like breakout retest of structures around the market we are monitoring before placing directional bets. And that is basically what the core of this session is going to be like. So there you have it, my in-depth look at what the US dollar market dynamic is stating at this point in time. And with this information we have gathered here, let's roll into the asset we are monitoring for this week and see how this is influencing the sentiment there and how we intend to capitalize on the next move. So the first asset we are going to be taking on this morning, as always, is going to be what's it called again? The US oil spot, right? We are going to be looking at the US oil spot, and look at what happened last week. We saw a significant move to the downside last week, right? After price broke down these two structures here. Hold on a second, please. Hold on a second. Okay, so from the structure here, I didn't really go too far on the US crude oil. I guess we are back on, isn't it? Okay, I think we are back. All right. So considering the engulfing bullish candle that started today, chances are that we may be or make some recovery. Today, crude oil grew by 2.5%. Last week, it closed around the 58.4. It is currently oscillating around 400 area after last week's sharp drop. And the momentum we saw last week was helped by Trump's but the momentum we saw this morning was helped by Trump's softer weekend tone towards the Chinese government and easing Gaza conflict fears. Now, still, trade tensions remain a drag on the demand outlook as Trump keeps tariff threats on the table, and China also warns of retaliation. Meanwhile, China's September crude imports hit a yearly high, which is a very, very good news for buyers in this market. Remember, China is the largest importer of crude oil in the world. And for their demand, it's a very significant signal that demand is still strong. So for traders, the tug of war between geopolitical situation and trade war fears will be guiding short-term direction at this point. Now let's go into the 1 hour time frame to see how the market is digesting this structure we identify on the 1 hour time frame. Will give us an insight into where the buyers and sellers are sitting, and that will give us a clue of where we are likely going. So right here on the 1 hour time frame, the first thing I did observe is the fact that the week has started on a strong bullish note, and then it found resistance at the $59.33 level, right? And as a result of marked out the $59.33 and of course the $58.40 area. Now, you know how we treat this kind of range band. Whenever we identify them, we wait for the structures to be broken. If it breaks to the upside, we hold on to a bullish bias, and if it breaks to the downside, then we start considering selling. And with this in mind, I was able to place a buy right above the resistance line of this range. And if you look at the bottom of your screen, you'll see that I do have a position running, but it's still in a loss. I think a small loss because I entered just right above that resistance line. And if you look at what is going on here, the last 1, 2, 3, 4, 5, 6, 7, 8 hours shows that even though we have the breakout of the resistance line, buyers are struggling to maintain that momentum. Now it tells me something. It might be that buyers may no longer be able to run through this, especially considering the fact that we are within a strong downtrend scenario. So we need to be very careful at this point. Sellers might come in here, as you can see. Continued selling pressure persists and happens here, it could incite a move to the downside. So what I will do is this. I want to be logical about my decision around this area, even though I have a buy position running, and considering the fact that we are within a downtrend, and look at this engulfing bearish candle, price action is still within it. So we are still somehow within seller's territory. So what I will do is this. I will place a sell stop order below this lowest point of that recent range bound here, and then have my stop loss above the structure, this highest point for this week. Okay. Now my stop loss on the buy position is still way below this area. So it depends on what happens around this area. So I just have place my sell stop order right around the $59.20 level. The reason why I'm doing that is basically because of the indecision that has gripped the market around this resistance line. So I want to sell below here, have my stop loss above the structure, even though I have a buy position running, and let's see how this will play out. So even if price drops into somewhere here, we move stop losses, secure the sell position, and then let's see how it plays out. Buyers still have a room of coming in from here to continue the uptrend move. So that is basically what I will be doing here on this one. And if price at any point in time drops and breaks down the $58.41, I want to see a retest of structure for confirmation's sake, join the bearish move. Then if further breakdown of the 58, will definitely welcome more selling ideas. So let's see what happens here. If anything new comes up, I will definitely update you on my Telegram platform. So that's my view on the US crude oil. If you have any questions, feel free to let me know in the comment section. So I'll take 5-10 seconds off and I'll come back to continue from where we stopped. All right. So, in the absence of no questions, I guess we are all on the same page, isn't it? So, let's move on to the next asset on our watch list. Stay tuned in. So the next asset I'm looking at for this week is the GBPUSD. Now it's interesting. Okay, so I did share an update. I did share my view on this asset. I did a top-down analysis during the weekend where I told you about the fundamental factors, how the market is reacting to the fundamental factors using the technical structures we have on the chart. And as of this morning, I gave an update on the 1 hour time frame after monitoring the character of price action since the new week began. And the first thing I noticed here is this trend line, right? I noticed this trend line, isn't it? And remember in my video, I mentioned that the pound sterling has been on a strong downtrend throughout last week, and not until after the hawkish remark from the Bank of England policymaker, that is Catherine Mann, where she mentioned that inflation is still high and that the Bank of England will have to maintain its restrictive monetary policy, which actually gave the pound sterling some lift. And the 1.327 now became my key level going into this week. Then besides this trend line here, we can see that since the week began, the market has been more or less indecisive as price remained confined within the 1.3354 and the 1.33250. And like I did say in my my commentary this morning, placing a buy stop order above the 1.3354, I actually did that this morning. Unfortunately, the buy position did not do well. As you will see, I've been taken out of that. Okay, still on. The buy position is still on. I think I have my stop loss around the 1.33515. So why is it still on? Okay, 1.31993. 1993. Okay, I had it right below the key level. So like I said in my video, I still lean towards a bullish expectation. For the fact that price still remains above the 1.327, I want to maintain a bullish bias. But within that bullish setup area, sellers could still come in, and that is why I entered the sell position I took after this trend line got broken. I took the sell position basically of two things. One, the trend line was broken. Secondly, we are within a strong downtrend scenario, and if price goes on to do something like this, I want to maintain a bearish bias here. If buyers find it difficult to break above, I want to maintain a seller's bias. So I might want to add more sell position below the 1.3325 if sellers keep on showing resilience around that area. Now, if price now moves towards this key level, it will have moved over 60 pips in my favor. And by that time, I want to be moving my stop losses, secure some profit, and then wait to see how the market will reach key level at the 1.32700 area. So that is basically what I'm going to be doing around the GBPUSD. Now, one thing I would also like to say here is that the pound sterling still has a room to thrive from this area, especially considering that the week started with a softer US dollar as the Fed rate cut expectation grows. And then risk appetite has also improved after Trump backed away from near-term China tariffs. Now, expectations that the Bank of England will keep rates steady had further technical support to this to the GBPUSD. So the rebound from that area we saw at the 1.327 last week still looks fragile at the moment anyways, but need to see strength for continuation. So depending on what happens from the economic event, so tomorrow the market is anticipating a bunch of labor-oriented data from the United Kingdom in form of the average earnings excluding bonus here. We have the claimant count change, we have the employment change, the ILO unemployment rate, and of course the Bank of England is also going to be speaking tomorrow evening. So we have some very, very important events that could drive the sentiment around the GBPUSD. So what we are seeing here is more of a short-term narrative. So I have my sell position triggered, though I know the market is looking bullish as long as price remains above the 1.327. So let's see how this is going to play out. As soon as price moves close to the key level, I move my stop loss, secure the profit, and let's see how it goes. If anything new comes up, I will definitely update us on my Telegram and TradingView platform. So that is what I'm looking at basically on the GBPUSD. So I do hope I made myself very clear on that one. If you have questions, feel free to let me know in the comment section. So I'll take another 5-10 seconds off. Let's see if there are any before we move on to the next one. Okay, so let's move on to the next one on our watch list. So the next asset is the USDJPY, right? And it's an interesting situation here. I shared this update this morning. This is structure I shared with us on my Telegram and TradingView platform, where we have seen that price was oscillating around that key level we marked out at the 152.00 area. Remember, this level was broken to the downside on Friday following Trump's announcement. And for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, the market has been consolidating around that particular area, emphasizing how crucial that 152 level is. And throughout last week, the US dollar did very, very well against the Japanese yen. As the yen continues to stay under pressure, traders are weighing that Japan political uncertainty and the delayed rate expectations against safe haven inflow is affecting the yen. So for me at this point in time, if the Bank of Japan talks of any possible intervention, it could limit the aggression of the US dollar. But if that is not the case, I think the dollar still has enough room to the upside. As you can see, traders should be watching. And one thing we also want to be aware of is the US-China situation, of course. And then China is also going to be releasing its trade data, I think today or tomorrow. And signals from that information could determine the next directional cue, because China is in Asia, Japan too is around that area, and the Chinese economy has a significant influence on the Japanese economy, just as the US does. So for me, the range bound structure here will be playing a significant role in guiding my decision going into today's trading session. And as you can see, right at the bottom of your screen, I already have a buy position running on the USDJPY, though I had a sell triggered when this price got here, right? I was thinking that the fact that price remained below that trend line could incite that bearish move, but that was not the case. So I'm in a loss on that sell position. The stop loss is somewhere here. I know it's going to hit stop loss very soon, so I will just allow it to play its course. Okay, so if the bullish expectation continues and I see something like a breakout retest of the structure, I will be looking to add more buy to my existing trade. So that means we are going to be on the verge of the second leg of that bullish momentum that started last week. So let's see how this is going to play out. If anything new comes up, I will update us on both my TradingView and Telegram platform. So that is it on the USDJPY. Simple trading setup, range bound structure. We are buying above the 152. If you are not yet in, you could buy right now above the resistance line and have your stop loss right below the key level. That's about 35-40 pips of stop loss, and let's see how far that move is going to go. So let's see, do you have any question? If you have any questions as regards to this, let me know in the comment section. I'll be right back in a moment. All right, so I guess we move on to the final asset on our watch list. So the final asset is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. Of course, I will not be going into the detail on the higher time frame. We already talked about that in my recent video on the gold commodity. And as of this morning, I gave us an update where I spotted this structure and I indicated within the structure that I'm looking to buy the break retest of the 4,059 level, and it appears price had broken out of that structure, triggering our first buy position for the week. And that position, as you can see, is currently doing very, very well. I have about $19 in profit right now. That's about how many pips is that? That's about 100 pips, close to 100 pips thereabout. So I think it's high time I moved my stop loss, secure some profit while we continue to monitor price action from here. Okay, so I will move my stop loss, secure some profit here. No, let's secure the position. I'll put a break even for now. It's not really what so I'll put a break even now while I continue to monitor price action around here. So if you are part of that move, you saw my update this morning and you took the breakout of the 4,059, please move your stop loss and secure the position at the moment. So as it is, we all know why the gold is very strong. It's supported by safe haven demand from the prolonged US government shutdown. Then the Fed cut expectation is still there, and then ongoing political tension is still on the table as well, all of which is supporting the rise of gold. Now, Trump's softer tone on China, of course, has eased fear a little bit, but there is still uncertainty around tariffs and global conflict as well, which keeps the buyers in control. So with that said here, we will continue to look for deep buying opportunities around this area. I'm not going to be considering selling at all at the moment, but if price does a dip at any point in time, I will still maintain my bullish bias. All I would just need to do is look out for reversal setup, buying pressure. Like this trend line here could be a bust stop for buying opportunities to continue the uptrend move. And if we see price drop below the 4,059 where continue selling pressure here, this could trigger some day trading opportunities where sellers could push price maybe to the downside or to this trend line that we have here. So basically, we maintain a bullish bias from a long-term perspective. And I also want to emphasize here that let's be mindful of our bullish entry. We need to secure profits at any point in time we have price move significantly in our favor, as the overbought condition is it still lingers. Prices at an all-time high. We are within uncharted territory. Anything could actually happen. So if price move your stop loss, secure some profit as price moves. Traders could want to crash the price from here out of fear that they don't know if the price could hold this area for too long. So let's ensure that we secure positions accordingly. So that is my view on the XAUUSD. I do hope I made myself clear. And it's on this note we've come to the end of today's Forex Morning Mastery, where we have been able to take on the 4 financial instruments on my watch list for this week, which includes the GBPUSD, which is we have a sell position running. I have a long-term buy on that position. Then the USDJPY, which is doing pretty well at the moment. Then the USOIL, and of course the gold commodity, which is doing very, very well right now. So I do hope you marked out the structures accordingly as we have illustrated during the course of the session. If you have done that, well done to you. So all we need to do right now is exercise patience and allow the structures to mature. Trust me, I will always be in the comment section on my TradingView platform and of course on my Telegram to give us updates as at when due. And for those of you who are following the Signal service platform here on YouTube, as likely I drop a signal today, maybe on the GBPUSD or the USDJPY. I think those two structures are giving short-term trading opportunities that we can actually squeeze something out from. So look out for that one. And for those of you who joined me for the first time today, I do hope you are able to gain one or two things from this discussion. If you have done so, why not click on the subscribe button so that you can be part of our subsequent editions. So the next one is on Wednesday, same time between 8 a.m. and 9 a.m. 7:30 a.m. and 8:30 a.m. UTC. I will be running the Forex Morning Live again on Wednesday, where we shall be coming here to see how well these assets are doing, and of course prepare ourselves for the next the second half of the week. All right, I see you, Constant. Good morning to you, Constant. Glad to have you around with us today. So it's on this note I would like to wish us all the best of luck today. And remember, every decision we make in the market is more or less an educated guess. So with this understanding in mind, let's ensure that we have a well-defined risk management strategy. So I wish us all the best of luck once again. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.